Time for the market report. As you might expect, a bit of a downturn in the market.
That and this month's WASDE report, along with more market talk. But first, the numbers. What were the week's biggest gains and losses? And then this month's WASDE report. What did it have to tell us? And finally, in our row report, we continue our talk with Dr. Will Maples about the row crop markets. So, markets closed, this time on the downswing. Both row crops and livestock split. Let's take a look. The week's biggest gain, cotton up nearly 4.5 cents, a tad more than a 6% increase from the previous week. The week's biggest loss, sugar, again, this time down 1.25 cents. That's more than an 8% decrease from the previous week. So this month's WASDE report dropped and had a good bit to say about current production and stocks both domestically and internationally. Here's what it had to say. U.S. wheat supplies raised on higher imports. Domestic use lower due to less seed use. Exports unchanged at 900 million bushels. Ending stocks raised to 10% higher than last year, the largest since 2019. Season average farm price $5 per bushel. Global wheat supplies up 1.5 million tons, due mostly to higher production from the EU and Russia. Consumption down nearly 5 tons due to less use in India. Trade nearly 500,000 tons lower as well. Global ending stocks raised about 6 million tons. U.S. corn outlook unchanged from last month. Season average farm price $4.15 per bushel. Global corn production raised, mostly in South Africa, Indonesia, Russia, and India. Imports up for Turkey and Morocco, but down for Iran and Indonesia. Ending stocks at about 295 million tons, up 2 million. U.S. rice use down 2 million hundredweight. All rice exports also down by 3 million hundredweight due to slow sales and shipments to markets in this hemisphere. Ending stocks up 5 million hundredweight, the highest since 1985. Season average farm price $12.10 per hundredweight. Global rice supplies up nearly 500,000 tons, mostly on larger production in Thailand. Consumption lowered nearly 500,000 tons along with trade, mainly on slow exports from Pakistan. As a result, ending stocks up nearly 1 million tons. U.S. soybean crush raised 35 million bushels due to increased meal and domestic use. Exports down 35 million and ending stocks unchanged at 350 million bushels. Season average farm price $10.30 per bushel. Global soybean production raised 0.2 million tons due to higher crops in Paraguay and South Africa. Exports mostly unchanged while crush increased for the U.S., Brazil, and Algeria. Ending stocks down 500,000 tons. U.S. pork and beef production down due to less slaughter. Broiler and turkey production raised due to slaughter pace and hatchery data, respectively. Egg production also up as well. Milk production raised on higher cow inventories, offsetting slow growth in milk per cow. Imports lowered for both fat and skim solid basis due to higher projected shipments of cheese, butter, and dry whole milk. All milk price forecast $20.50 per hundredweight. U.S. cotton shows no changes this month. Season average farm price 61 cents per pound. Global cotton production raised 900,000 bales, mostly on increases for China, India, and Pakistan. Global consumption raised 560,000 bales on higher mill use in China and India. Imports and exports both lowered significantly, while ending stocks raised over 650,000 bales, and the projected stocks-to-use ratio is about 65%. So, this week in our row report, we continue our discussion with Extension row crop economist Dr. Will Maples. This time, we give a bit of an overview on the economic climate, especially in Mississippi, in light of recent conflicts and their effects on the markets.
Last year, coming into planning, we had the new Trump administration. We knew the tariff situation, the trade war with China was going to be kind of kicked back off. There's a lot of uncertainty around planting soybeans. Prices weren't great. But this spring, we've got a trade deal somewhat in place with China. Prices have rallied. When you start budgeting it out, corn versus soybeans, soybeans are at least maybe not profitable, but are losing less than corn is on a lot of farms. The high input costs with corn is another big factor, especially that fertilizer piece. We got high fertilizer prices still. Producers in this feel a little bit more comfortable planting lower cost soybeans than corn. In this report, last year we planted 160,000 acres of corn. We're cutting that in half. Planting Inspector report says Mississippi's going to plant 80,000 acres. This would be the lowest amount of rice we've planted in the state since the early 70s. A few years ago we planted 87,000 acres. But outside of that, we've been up over 100 to 200,000 acres most years. Rice has been one of those commodities. Prices has been tanking through the fall. They're having export issues. Some producers are having issues just trying to sell it, even out of their bins this year. So there's not a lot of optimism around the rice market, and it's showing with kind of current projections of what we're going to plant. So a lot of the Midwest producers, they're growing corn, they're going to face these high fertilizer prices, but they're able to get some of that fertilizer out already, probably booked at lower cost. Southern producers, especially here in Mississippi, if they hadn't had anything booked and they're growing corn as we get into the year, it's definitely going to be a kind of a shock to their bottom line with these new high prices that we're seeing.
And that's it for a deeper look into the markets. Seems uncertainty in fertilizer prices will be a determining factor in Mississippi ag this year.